Paul, it does seem like Powell dialing back on the hawkishness which we heard last week.
Well, I think the market was more sensitive to the Bullard comments on Friday. So there's a bit of asymmetry there in terms of how the sensitivity to the more hawkish camp had been materializing. But yeah, I think Powell's comments were more comforting for the FX market overnight. And as you rightly pointed out, the dollar's softer, and that is a sign of relief for now.
Taking a look at the dollar, Paul, I mean, showing strength yet again, extending the gains that we've seen the last 4 or 5 weeks. We have Asian currencies now on the decline. What's the path forward for the dollar?
Well, our view is that, look, this is a short-term positioning squeeze. You know, the Fed basically threw a stun grenade into financial markets last week, and there had to be a lot of recalibration in terms of thinking for the next couple of years. But we also know that there was a decent buildup of short dollar positions going into it. People are trying to get very comfortable with carry trades, and these are being unwound. So I think that this is just a short-term bounce by the dollar. It's not going to be sustainable, and we'll come back to the longer-term driver, and that is, in a synchronized global growth story, the dollar should be on the back foot.
So, Paul, how do you fade that dollar strength then? What's the best way to express this hawkish surprise from the Fed?
Well, that's a good question. Now, we've been thinking about a number of different strategies. I mean, first of all, probably where those markets have been having underpricing in terms of interest rate expectations over the next couple of years, perhaps for some of those in the Antipodean region. So we've been bullish on the Kiwi dollar just in the aftermath of the Fed. Probably also some of those currencies where things have been overshooting in terms of expectations and optimism, where we think they could actually underperform the US dollar, such as the British pound.
And when it comes to the renminbi as well, I know we're being very abrupt in these changes in currencies, Paul, but it seems like right now the Fed hawkish surprise is kind of causing a curveball for China when it comes to maintaining that market stability. Do you think the renminbi can stay stable amidst this vol we're seeing across the globe?
Well, the short answer is yes. I think if China wants to keep the renminbi stable, they can definitely do so. But we also know that the messaging over the last number of months is that they've been trying to deflect some of this currency strength by changing some of the regulatory landscape, et cetera. So we've actually been of the view that the currency would be weakening modestly this year. That hasn't changed in light of the recent Fed decision. Our view for 6.6 for the end of this year is very much a comfortable view with us.
Paul, I mean, chime in on this whole Bitcoin crypto debate here. A lot of people talking about the relationships that it could have with fiat currencies. Are we starting to feel any kind of inverse correlations or any kind of relationships that are actually building?
Well, you get windows where there's a connection, but it's not very strong and consistent. So I think it's very early days. I mean, we've spent a lot of time looking at this, not just with regards to currencies, but the behavior of cryptocurrencies to other financial market instruments. And it's pretty much standing out by its own in terms of our analysis. Perhaps that could change if the volatility structure of cryptocurrency were to come lower, maybe become more correlated with fiat currencies. But as I said, it's very weak and inconsistent.